Welcome back to Commercial Finance Experts Academy. Welcome to my humble home office today. I'm here to go over something that I feel that I'm quite passionate about and quite openly about. The one thing I discussed yesterday was regarding the different levels of financing that's available even at every branch such as RBC. Well, today I want to touch base on something that's really bugging me, especially when I hear it often inside of the mortgage broker industry, is yes, I refer my business out to the branch because I can't do it or because it's a commercial file and I don't want to touch it, I don't want to deal with it. I think that's a tragedy. Why do I think that's a tragedy? Is because I get a lot of the referrals from the bank. Give you an example. There's a recent file that I got from one of the retail branch as a referral because they believe that they don't have a way to get it done, and the bank is green. You probably know what it is. I'll probably say the name by loose lips here. Is that they can't get it financed and they send it to me because I have been reaching out to them over the past years to connect with them and be able to show that I'm able to refer them clients, and they shouldn't have any fear referring me clients as well, and I do it in a way that it protects everybody's best interest and as well as the client. So this client sent to me, and overall I interviewed them, I looked at them, and the file is pretty tough as I can see already, but when I look at the numbers mathematically it makes sense. They're still within the TDS and GDS guideline. The only problem with these four clients is that they're buying a 2-bedroom condo. Yes, 4 of them. Brother, sister, different family, and the sister has a husband as well. So there's literally 5 of them living under renting in a 2-bedroom basement right now. So they're really happy to get out because tenants, landlords they're all at the mercy of the landlords, increasing the rent to kick them out and move the next person in and increase the rent again. Anyhow. The challenge that I saw right away is that because of they're new to Canada, they've only been in Canada in less than 4 years, and their occupation and their credit is not all that great. The first two, that's the mom and the daughter. They've been in the nail salon business for the last 4 years. They've been in Canada. 5 months ago, they decided to jump ship to a new location that pays them better, that pays them more. But that's a problem with that because they're all on commission sales, so the 2-year average doesn't make sense. But however, if I just use the minimum income that they made, year-to-date income for the last 5 months, combine it with the other 2, they debt service. Okay? What's the other challenge? Well, the challenge is mom has no credit. In the last 4 years, she never cared for it. One of those traditional old mature folks who don't believe in anything except cash. And the daughter has a TD credit card of $1,500 on her credit file for the last year and 2 months or so. So not enough, no 2-year credit history. The other brothers one is a seasonal worker. He's been doing commercial fishing for the last 3 years. And of course, if the other fishing captain stops doing work and he goes to the next ship, and he's with a new one for 1 year. But the problem is they're seasonal. So they're 6 months off work and 6 months on EI. That's the traditional of the commercial fishing. So income is not that great. We need to use EI income. And however, the last 3 years, I average it out. It's fine. And if we can use the last 3-year average, it's been pretty consistent, 23,000 throughout the last 3 years. Good income. The other one was the breadwinner, the brother that has a salary job, and he makes 22,000 the year before, and he got a big pay increase this coming year on January. It became 32,000, so an increase of $10,000. Using the 2-year average doesn't really help the file. They're barely just underneath the TDS GDS guideline, which 20% down is fine, should be enough, even with the new benchmark to qualify. Now, the biggest challenge I can see is overall the file is weak. Because of why? Credit history, because they're new to Canada. They don't qualify new to Canada because they don't have 35% down. So they can't go that route. And 20% is all they have. They've saved up over the years. So my argument is that since I got this from the branch, they can't get it done anyway. You know what? The clients love it, and I only see they have TD credit history and any kind of relationship. There's no other relationship with any other bank lenders. So the credit history is pretty weak, right? So I figure if I package it properly and justify the reasoning why they can qualify and why they have no issue with the matter that they're making more money, the daughter and mom is in the future, she's, you know, the last 3 years they'll be making more than what the 5 months income is. So I justify with that and everything, but overall, you know what, I expect a decline anyway. So TD came back and declined it, and I talked to our Scotia underwriter, same thing. They said it's too weak, the credit bureau file and the history is too weak. I thought, you know what, I've done it in the past where I've repackaged it by explaining everything in detail and are making arguments, everything from the fact that they've been with TD for the last 3 years, 4 years since they came to Canada. They've never missed payments on any credit card. They had some term loans, RSP loans with TD. They paid that off in time, and they've never missed payments on the credit file since day one. Plus, their income is increasing, and all of their income, all four of them have remained in the same industry for the last 4 years. So they're consistently stable in the same income, same industry, so the experience can carry on for them to move to the next job, and they have a high confidence level of increasing their income over the year. The other one is that there's no any history with anybody else, so they're very loyal to TD. It'd be a shame to lose them, and especially with they've accumulated all this money, the entire 20% over the past 4 years to get this kind of money. That's scrounging out, scraping every bit of money for, you know, $68,000 is a lot of money. But accumulate for all combined 4 of them, that's quite a bit. That's unbelievable, I would say. Most families are unable to do that in today's world if they live by themselves, or if they don't all share in the same rent in the same room. You know, 2-bedroom for 5 people. It's like, other than Asian folks, I don't think anybody else could do it. Maybe some other ethnic minority as well. All right, I won't be. Anyway, let's get off of that. That's one thing, you know, and I repackaged it, and I explained why TD should give the approval, and I forwarded to one of my experienced person that I know at TD who's been there for a long time, over 15 years, and they have a good relationship with the underwriter and be able to send it in and discuss with the underwriter personally. And you know what? Within 24 hours, that file was approved by the TD mortgage specialist that I forwarded to. Why? Because it's all about relationship and the experiences, and as well as the know-how, how to be attacked and how to write a summary that is strong and convincing to get the exception that they need, right? And the relationship helps a long way. As I mentioned in all the other videos, relationship sometimes it's vital. You need that. For a good broker, not so much. For a great broker, if you want to be a great broker, develop those deep relationships with these people, underwriters, and anybody that can help get exceptions, right? That's the reason why I have lunches with regional sales managers of all the big banks. Just makes sense. Get a relationship, and they point you to the right person that can get the job done for your client. So at the end of the day, I explained to the client, actually beforehand, I already preface them way at the beginning that in case that we need to go to the B side, like Home Trust, Equitable Trust, which would approve them the loan, but they didn't like the high rates, and they were aware of that there's fees involved. So they weren't reluctant at all when I told them that, you know, I do have an avenue, and this will be done for them just with 20% down and best retail rates. They were thrilled to pay me my 2% that I told them that this is what we charge, right, for any amount less than my minimum threshold. Anyhow, that's just on the residential side. The other side I've seen often too is commercial, and commercial happens quite often as well. The banks was referring me clients because they were unable to do it, and I was able to take that from one bank either to a credit union or to a different bank. You know, like I have a client in the past that was referred to Big Blue to me, and they weren't able to get it done, but I was able to bring it to Big Green and get it done, or Orange Band, or the red guy, right? You know who they are. It's not that difficult as long as you find a way to convince them that this is a great file and why, right? And if you have sufficient strength on it and find out the backstory to give it more oomph to it, it gets approved, right? I don't like it, especially when brokers say, you know, I just send it straight to the branch and they deal with it because I don't want to have a headache to deal with and all that. You know what? I find out that if you do that, you lose out. You lose your reputation cred, and you have no control over what happens at the branch or how they, if they do the deal or not. And why I say that is this, because not every mortgage broker, I mean, let me ask you, would you agree with me that not every mortgage broker is competent and as good as the next mortgage broker? I feel so. I think so. I've seen so. Right? Some are competent, some not so competent. I wouldn't say they're incompetent. It's just that they don't have the skill, they don't have the experience and the creativity to be able to reposition that file so that it sounds nicer, so that it seems able to more appealing, I say, so that they can say, you know what, it sounds good, and I would make an exception of that, and that makes a difference. Because if you send that client to the retail branch and that person can be incompetent about it, or they're not specialized in that specific field, such as farm financing or health related financing for a doctor, they can really screw up that deal. All right, or make the client unhappy about the results, and that affects you, even though you have nothing to do with it. Does that make sense? So I am totally opposed to sending straight to the branch. Right? Why not find a commercial financing expert and refer the file to him or her instead, right? Or if you have developed a relationship with it and you know this person is highly competent, then yes, perhaps refer them back to them. But then at the end of the day is, why not help the industry, your brethren and sisters, and help them, feed them, instead of sending directly to the branch, right? And you know, you pat my back, I pat your back, okay? So if you have any questions, feel free to reach out to me. My name is Sue Chun, Sue at sharingbanksecrets.com. And if you're looking for a commercial financing workshop, check out commercialfinancingmastery.com. And if you'd like to have any future topics you want to talk about, just put it in the comment section below. I would love it if you like this video and you see some value in it. Click the like button and subscribe for the future videos. Okay? Have yourself an awesome day and look forward to the next video. Take care. Have a good one.